Hello and welcome to Virtual Investor Conferences. My name is Eric May, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Energy Fuels Inc. Please note, you can submit questions in the box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Mark Chalmers, President and CEO of Energy Fuels Inc., which trades on the New York Stock Exchange American under the symbol UUUU, and on the TSXV under the symbol EFR. Welcome, Mark.
Thank you. And it's my pleasure to present a very unusual investment and story on Energy Fuels. There really is no investment like Energy Fuels because typically you would invest in a uranium-only company, a rare earth company, perhaps a vanadium company, or a company that focuses on medical isotopes and recycling. And really what Energy Fuels is doing is building a critical mineral hub really focused on the clean energy transition. So you get diversification in all those areas, and I'm excited to tell you this story today. I may be making some forward-looking statements, and that's included in this first slide. Just remember that. Energy Fuels is the leading producer of uranium, vanadium, and rare earth elements in the United States. And all these elements are getting increasing significance for a better world, particularly on reducing carbon emissions and improving electrification. When I graduated from the University of Arizona a few years ago, I won't say how many, typically a mining engineer, geologist, process engineer, there were a number of elements that you focused on. It's copper, gold, nickel, coal mining, uranium, and others. But now, in the last 5 years, we've all seen this this new paradigm of a number of elements that nobody even talked about. Particularly things like lithium, cobalt, graphite, and the rare earth elements. So our company is evolving to include some of these elements in our portfolio. We have a long history of producing uranium, vanadium. I produced uranium this year. It's 47 years. I've been in the uranium business, and now we're adding on these other elements, and that provides, again, a certain level of diversification. All these elements, whether it's nuclear fuel assemblies, vanadium flow batteries for storage, wind turbines, defense, or electric vehicles, are the type of elements that we're producing. And I think it's really exciting to see, like even today, there's this announcement in the United Arab Emirates, focus of 22 countries to expand the use of nuclear power by threefold by 2050. 2050 isn't that far away when you start looking at reestablishing the nuclear fuel cycle around the world. So it's a really exciting place to be, including the rare earths, as I mentioned, and this whole focus on a cleaner, better world. Every product that we produce is a high value product line. Uranium used for clean, zero carbon energy, about 50% of the zero carbon energy in the United States. So there is no getting to net zero or zero carbon without nuclear in the mix, or no credible way to get there. The rare earths, as I mentioned, used for the powerful magnets, used for EVs and other applications, getting certainly a lot more attention, and our dependency on China is gotten a bit overboard, as it is with uranium on Russia. Vanadium is mainly used for steel hardening, but it's also getting increasing attention for energy storage, like lithium, but it has some better characteristics than lithium batteries. It's not portable, but it has a better cycle life and storage capacity. The medical isotopes, when we're processing uranium and the rare earths, and our main focus on the rare earths is monazite sands, we solubilize a number of elements, and some of them that we solubilize are radium-226 and radium-228, and these elements are getting increasing interest for medical isotopes used for treating or curing cancer. So it's an early stage development for us, but if we're processing these various feed streams and able to recover them, why not, if it makes economic sense? The reason our company has survived the test of time, and many of our assets go back into the 70s and 80s, is we had a long history of recycling natural uranium products and vanadium at the White Mesa Mill, and that has been a savior during periods of low prices, and that is unique to our company as well. And we always pride ourselves on our financial strength with significant working capital and cash and inventory and zero debt. And we have one of the strongest balance sheets in the peer group in North America. Last reporting period, it was 160 million plus, and that's actually conservative because if you include some of our investments and the value of our inventories, it's real well north of 200 million US. Now, our core business has always been uranium, will continue to be uranium. As I said, I've been in the uranium business for multiple decades. I've mined uranium all over the world, in Australia and Africa and United States, and even in places like Kazakhstan. So I'm very committed. Our company is very committed to uranium business, but we have this capability to do uranium and more. Our company has a combination of conventional assets and in situ recovery assets. That upper left-hand corner is the White Mesa Mill, which is producing and has the ability to recover uranium, vanadium, the rare earths, do the recycling, and has an R&D license to recover radium-226. We have the Pinyon Plain mine, lower left, which is a mine I built in 1987. It is the highest grade uranium mine in the United States, and we have about 30 people working there right now, and that will be the first project to come online in 2024. Nichols Ranch is in situ recovery project that's on standby in Wyoming. And then we've got the LaSalle complex, which also is being ready for production in 2024. And in 2024, we'll produce or mine approximately about 1 million pounds as the first rung of going back into production. But in addition to that, we have 3 other very significant projects that are in different stages of permitting. That includes Sheep Mountain in Wyoming, the Roca Honda project in New Mexico, and the Bullfrog project in Utah. So we have a combination of both conventional and ISR, as I mentioned, and each one has their advantages and disadvantages. We signed a number of long-term contracts a little over a year ago. We sold uranium to the Department of Energy earlier this year. The initial contracts that we signed started this year. They go for 8 years, and we still have about 3.8 million pounds that they flex up to fill those contracts. And this year, with the combination of the contracts that we had and the DOE cells, we sold 560,000 pounds at about $60 per pound. Of course, the price of uranium was lower at the beginning of the year, but again, it was a very good price compared to what we've seen over the last 10 years or so. As I say, when you look at our company, we still get evaluated and valued as a uranium-only company, and we're so much more than that. And this table kind of shows our peer group of North American producers. We're kind of in the middle of the pack with a market cap about 1.3 billion US. But I want to point out, look at our really strong working capital position. And as I indicated, with some of our other investments and inventory, it's really north of that, north of, say, $200 million. We also were profitable last year and will be profitable this year, currently about $120 million of net income. We also have significant inventories, most of which we produced ourselves and we didn't buy. We have bought some uranium. But look at the ticks for the uranium. All these companies on this table have a green tick as uranium producers, but none of them have a tick for the rare earths, the vanadium, the medical isotopes, and the history recycling. So we are so much more, and we plan to leverage that to the maximum advantage for our shareholders, and I'll talk more about that in the next number of slides. So let's talk a little bit about the growth drivers for the rare earth elements. Uranium and rare earths go perfectly together, and the main reason they go perfectly together is we have the ability to deal with the best feeds of rare earths, which is monazite, which contains uranium and thorium, and we're able to recover the uranium, and we can handle it at the White Mesa Mill because we have the license and permits to do so, and we have a long history of uranium recovery at that facility. So this is something we're really leveraging on, and this is a unique example and strategy utilizing our assets to the ultimate best outcome and better utilization as we go forward with this strategy. Now, I don't have to tell you about our dependence on China in the rare earth space. I mean, when you look at the dependence that's been established on the uranium industry on Russia, it's even worse when it comes to rare earths for China. So, we now have these, dependencies on nuclear fuel cycle and the rare earth elements, all required for electrification, decarbonization, and we need to start reversing that trend. When you look at this graph, or this table graphic, you see a lot of red. Well, that's all China. That's how dependent the United States and other countries are on China when it comes to get a permanent electric motor in an electric vehicle or even a wind turbine. So it's going to be hard to reverse that. Energy Fuels will make a dent in that red curve and that red area over time with our plan, our strategy. We didn't enter the rare earth sector until April of 2020. So that was 3.5 years ago. And we've made more progress than basically any other company I know in advancing our strategy. And we announced it in 2020. We secured monazite from Chemours in Florida and Georgia. We started processing a rare earth carbonate. We began separating out the uranium and the thorium and the samarium and lanthanum, and then we started selling that to Neo Performance Materials in Estonia, and that we got to the market to a commercial scale, small commercial, quicker, faster than anybody really thought we could get there, and we keep going from there. In February of 23, we closed the acquisition of a very significant project in Brazil for monazite sands and heavy mineral sands. We commenced the construction of what we call our phase 1 separation plant, so we could be able to do separated oxides of NdPr and samarium plus at the same levels and an equivalent quality product as Linus would do in their project in Malaysia or even Neo Performance in Estonia. So we're very excited about that. We're able to build out phase 1. We'll have it ready to commission in first quarter of 24. We are also doing engineering work on phase 2, which will be about 3 or 4 times larger than the phase 1 separation plant, and looking at heavies later in 27, 28. So we are going for as far integration as we can as a company, and we're also now starting to look at the metals and alloy steps. So when you look at this whole integration story, the more integrated you are, the better the economics are. The Chinese are fully integrated, and the United States and Australia and UK, Europe are not. So we've already made it about halfway down the chain of integration. And as I said, we're looking at the rare earth metals and alloys right now as we speak, and I hope to have an initiative emerging on that front. We're looking globally, both for the mining beneficiation. The crack and leach will be done in Utah because we have the permits to do it, and the infrastructure and the people and the expertise. And separation will also be done in Utah in the phase 1, phase 2 plants that I mentioned, and ultimately phase 3. So it's a complicated process for a lot of companies because they can't deal with the radionuclides and they don't have a familiarity and experience with solvent extraction, but we do, because the White Mesa Mill is actually a solvent extraction facility for uranium and vanadium, and we have like 40 years of experience with solvent extraction at that facility. So the Bahia project in Brazil, as I said, we acquired it in the beginning of this year. We closed on it. It's nearly 58 square miles. We believe it has the ability to recover between 3,000 to 10,000 tons a year of monazite, because it's got some very high-grade monazite areas. And to put it in a context, our phase 1 is about 10,000 tons of monazite for phase 1 alone. Phase 3, phase 4, phase 2 will require around 40,000 tons a year of monazite. And if we secure enough monazite there, we'll be about 2/3 of a Lynas current production today when it comes to NdPr. So very significant, and we're currently advancing our resource estimates there with additional drilling. And we had a brand new drill rig show up just last week. And so we're going to take this forward as quickly as we can. Just some pictures of the White Mesa Mill, and the upper left-hand corner is actually commercially made carbonate that's going to Estonia. This is about 30 to 35% NdPr oxides, all the uranium and thorium removed. Pictures of people. Lower right-hand corner, that is our pilot facility, 72 mixer settlers, and that is what we are building at larger scale in phase 1. As I said, we'll be ready in Q1. Our focus has been on monazite, and as I said, why? Because it is the best feed of rare earths out there. We have the licenses and infrastructure. It is a high-value product, monazite, when it's been refined at these heavy mineral sand operations. It's already being mined around the world, and there's a lot of it. It was a problem up until a few years ago. And the Chinese have been focused on monazite, and we're basically replicating that in the United States of America. It's relatively easy to process if you can deal with the radionuclides. It's low cost for both capital and operating costs. I mentioned we have this long history of dealing with solvent extraction. And we're in the state of Utah, which is a great place to do business in the United States of America. So the number one challenge to unlocking the value of monazite is to deal with the radionuclides. And we have solved that as Energy Fuels at the White Mesa Mill. So now let's look at our peers in the rare earth space. And again, taking our uranium market cap and transposing it in with the rare earths, you can see that Lynas and MP have multiple billion-dollar market caps, $3 to $4 billion. Now, a lot of that's come off a bit because the price of rare earths has come down while the price of uranium has gone up. But Energy Fuels plans to get additional value for our shareholders by demonstrating that we can do the rare earth business in the United States at material scale and world significant scale. So, we're on our way, and I say watch this space because it's exciting, and it's probably one of the best stories I've ever told in my career. So some of our other longer-term medical isotope and vanadium, we have the only conventional vanadium processing plant in the United States of America. We produced vanadium last in 2019 when the price of vanadium was high. And even though it's a tough element to capitalize on, we have the ability to start it up when we decide to for vanadium alone. The medical isotopes, I talked about the radium-226 and 228, and we're very excited about that. Again, there should be more news flow on it in the coming months. But it's a very interesting spot because, again, we can recover the radium and others cannot because they don't have the infrastructure and the permits to do so. So we'll talk a little bit about our recycling and community involvement. First of all the products we do fit perfectly with ESG. Uranium with zero carbon, baseload nuclear energy, the rare earths for electrification improvements, vanadium for the high-strength steel and energy storage, medical isotopes. These targeted alpha therapies are known to be some of the most powerful new treatments for cancer treatment out there, and it's a very exciting area. And then Big Pharma is definitely interested in getting access to some of these elements in the United States of America. And the recycling. We have recycled natural uranium over the last 20 years, or the mill has recycled about 6 million pounds of uranium, and that would be equivalent to a coal train going from LA to New York and almost all the way back to LA. So that has reduced a lot of carbon emissions. So some of our community outreach, we set up the San Juan County Clean Energy Foundation. We started that with $1 million in a bank account, and we've committed 1% of our revenues from the White Mesa Mill going forward. We've already made about $270,000 of awards, mainly to Native American initiatives. We're very excited about that. Scholarships, STEM education for people on the reservation, transport on the reservation. We've done some work at one of the local museums and high schools. So it's really getting momentum. It's chaired by a Navajo veteran. His name's Ryan Benally. And we also have a Colorado Ute, White Mesa Ute, also on the advisory board. So it's really an exciting initiative we've had, and we've never done so much on this ESG and community consultation front. And it's really taken us forward in leaps and bounds in the region. Financials, I already mentioned that we had north of $160 million of working capital at the end of September. And as I said, that is very conservative because it doesn't include the value of our uranium and our vanadium at current prices, which is almost $50 million greater than that. It doesn't include some of our investments like Consolidated Uranium, which is now going to be ISO, which is around $25 million US. And it also doesn't include a note that we had that has now been paid off by Encore, which was a total of $60 million note. So we are in a very strong position financially, and again, zero debt with about $1 billion worth of assets completely paid for. Now, this slide just sort of reiterates that with the inventories of uranium and vanadium that we have, and that puts us in a great position to fill our contracts and restart our mines as we're doing in 2024. So it's a very exciting time for us, both on the uranium and the rare earth front. So I mentioned that we sold about 560,000 pounds of uranium that we produced this year and made nice margins on that. We're preparing these conventional uranium mines right now to go into production in early 2024. They're actually doing some production now, but it's at small scale. That'll total about 1 million pounds, with the view that as we sign more contracts, we'll expand that. Next step will be up to about 2 million pounds. And then the rare earths front, we are going to process about 600 tons of monazite by the end of this year. And we plan to make that closer to like 1,200 next year with other sources coming in. And we'll finish up this phase one circuit that I mentioned that has the capability of about 10,000 tons of monazite to be processed per year in phase one alone, and advancing the Bahia project. So this is a very exciting time for the company, well-funded, zero debt, and we've got the people in the right places, and we've got a very aggressive strategy, but not a reckless strategy, and we're fully funded for everything we want to do for the next, at least next year or two in a big way. So now I'll just open it up for questions. First question is, does IRA provide any incentives for uranium exploration and development? It's not directly, I think, focused on exploration development, but certainly has support for nuclear power and some of these other critical elements. Uranium currently is not on the critical mineral list, and there's a few efforts trying to change that and put it back on. But I think it does provide support for the realization that we've become overly dependent for a lot of these critical elements that we have. Another question is, what is the CapEx of the rare earth processing, and how is it going to be financed? I just want to say that the phase one was about $25 million to do phase one, because we did it in an existing infrastructure that we have in the SX building, and utilizing the mill to do the cracking and leaching of the uranium and the thorium, and making the carbonate. So that's an insanely low strike rate for the production that we can have, up to 1,000 tons of NdPr per year. Now, if you start looking at phase two with a complete independent crack and leach and the capacity of, say, 2/3 of a Linus, 4,000 tons of NdPr per year, you're probably looking at somewhere north of about $300 million. So how are we going to finance that? Probably through a combination of debt and equity, whether it's an off-taker, whether it's something from the U.S. government. We think the key thing is if you can show the world that you have the dots connected, financing is not going to be a problem. Another question, are you seeing an increase in M&A in uranium? Yes, I think you are. And I want to emphasize that we are not getting out of the uranium business. We have been looking at M&A, and we've made some offers. They haven't come through, but we plan to continue to look at M&A that makes sense for our company looking forward, as are we looking at M&A for heavy mineral sands and monazite going forward. So we are very actively looking at M&A for our company because, again, we are planning to be world significant in the rare earth space globally. In the uranium space, we will continue to be United States significant, North America significant, but probably not world significant because of places like Kazakhstan, and some of these other bigger projects outside of the United States, and even including Canada. One question, how far down the supply chain do we intend to go? Well, currently through separated oxides, both lights and heavies, but we're now looking at the metals and alloy step, and we think that the United States of America needs to get at least the metals and alloys, so then the next step is making rare earth permanent magnets. Will the rare earth business be profitable in 2024? Well, it's kind of difficult to say how that revolves out because we're doing the uranium business and the rare earth business at the same time. Will it be profitable in time? Yes, it will. I still want to emphasize that we were profitable last year and we're going to be profitable this year. And our company is one of the few, well, actually, outside of Cameco, I think we're the only ones that have been profitable for the last 2 years. And we plan to take strides to be profitable as soon as possible, but we also have some pretty significant investments over the next couple of years as we expand our position. How will you utilize your working capital in 2025? Any buybacks or dividends plan? Look, right now, a lot of our working capital is going back into mining. So we'll be mining this around a million pounds of uranium equivalent, and that costs money to get that uranium in the can. So we'll be building inventory on the uranium front. We're not currently planning to pay a dividend. I hope to do so as soon as possible, but we're also reinvesting in the rare earth space. So it'll be distributed between the two. It'll be distributed fairly equally between the two for a lot of reasons. One, the uranium business is really hot right now, and we plan to capitalize on that as much as we can. But we also believe that the combination of the rare earths are two great places to be, and they provide diversification. We provide some guidance for 2024. We're just finalizing our budgets right now, and we have our board meetings later this week. I just want to get that done before I actually go on the record on what that's going to be. But as I said, you can plan on, we're planning to mine around 1 million pounds of uranium, and that includes perhaps some processing in about that order of magnitude. And we'll also be cracking and leaching and separating rare earth oxides in 2024 as well. Let's see, is there any other questions? So, look, there doesn't appear to be any other questions. I know that our story is different than everybody else's. We're proud of that. And as I said, you typically going to invest in a rare earth play or uranium play or a vanadium play with Energy Fuels. You get the diversification between all those. I do not feel we're getting literally any value off of the rare earth assets. We are going to continue to make major strides on the rare earth front in 2024. I think there will be good news flow. And I think people will start to get our story better than they do now. But remember this, when this uranium company, when you look at Energy Fuels uranium company, over the last 15 years, two companies have produced 85% of the uranium produced in the United States, or the company's assets have. Energy Fuels has produced 1/3 of the uranium in the United States, and Cameco Corporation assets produce 50%. So two companies produce 85% of the uranium in the United States over the last 15 years, and Energy Fuels will continue to be either the biggest or second biggest for decades to come. So